Buying a home is the biggest financial decision you'll ever make, but is it the right decision for you? In this video, we're going to cover some of the pros and cons of buying a house. We're going to look at some of the key things that you should consider before you make that decision to buy a home for yourself. By the end of this video, hopefully you'll feel a bit more equipped with some of the information that you need to know to make the best decision for you, whether it comes down to buying a house or not. We're also near the end of the video going to touch on some of the reasons why people might stay renting versus buying a house and how the two weigh up together. So if that all sounds good, let's get stuck into it. The housing market is always a hot topic of conversation in the news and particularly in the world of business. I'm willing to bet coming into this and watching this video, you've seen 2, 3, 4 articles on the housing market and affordability of housing in the last few months alone. It's always something that bubbles up. But has it drastically changed in the last few years, or is that just a news cycle that's creating stories? Well, if we look back and if we were to go back 30 years to the mid-90s, the average house price in the mid-90s was approximately £60,000 purchasing a property. Whereas stats published recently by one of the leading mortgage lenders, Halifax, suggest that the average house price has gone up to just over £300,000 when purchasing. So in that time frame, house prices have increased by over 5 times the amount that they were in the mid-90s. That's a significant increase. But it's really important to weigh this up versus the growth in wages. So in real terms, is your money still buying as much now as what it was in 1995? Well, if we go back to that same time period and we look at the average wage in 1995 in the UK, it was about £17,000 a year. If you look at the average salary today and stats published recently towards the end of 2025, the average wage in the UK at the moment is around £35,000 a year. So in that time frame from 1995 to 2025, wages have roughly doubled in terms of what people are being paid. So the answer to the question is no, wages have not kept up with house growth, which has made housing in the UK significantly more unaffordable than it was in the mid-90s. So in real terms, the amount of money that people have to put towards their housing has significantly increased and is much higher now than it was in the 90s. This can obviously vary by region, and a region that often comes in the spotlight is London. And if we were to take a look at that average house price in London published recently, it's approximately £575,000 for an average home purchasing in London, whereas the average salary in London is just over £50,000 a year. So if you stretch that out, that's a significant amount more money than income you have coming in to be able to purchase a house in London. With the tables turning on affordability of housing in recent years, it means that it's more important than ever to scrutinise the decision on whether buying a house is actually worth it. And that's what we're going to go into now. The first big consideration when thinking about if you want to own your own home or not is the deposit. Deposits have had a lot of publicity in recent years in particular, and how drastically they have changed as a percentage of the total amount you need together to be able to buy your first home in particular. These rules drastically changed after the 2008-2009 financial crisis, when there were a lot of mortgages out there in the market that had very, very small percentages on them, which meant that a lot of people owned their homes on a full mortgage rather than having a lump sum of their own money invested. So those rules were changed, and ever since then it's been much more important to have a higher deposit saved to be able to get better mortgage rates. In short, the more money you have saved in a deposit, the better mortgage rate you're likely to be able to get. The less money you owe on a mortgage, the less interest you end up paying over time. That's the really simple linear way of laying it out, but it's not always that simple. Saving up an amount of money that could be required to buy your first home is really significant and can be really impactful on your finances. If we take the example that we gave at the top of the video of the average house price being £300,000 a year, if you were to save 10%, that means you need to have £30,000 saved up to be able to buy that home. And in today's world, the average deposit, somewhere between 10 and 20% is probably what you're looking at. If you're moving into the 20s and the 30%, you've got a much better chance of getting a mortgage rate through, getting a mortgage deal offered to you, and also being able to get better interest rates on that mortgage deal as well. But really, you want to be looking to aim for somewhere between 10 and 20% to have saved up to be able to get yourself onto the property ladder. But I now probably know what you're thinking. You're thinking, where am I getting £30,000 from to save 10 to 20% of the property value that I want to buy? Well, there are a few options out there. The most obvious option, and the one that you probably hear a lot about is the kind of colloquial term of the bank of mum and dad. Lots of people use their families to be able to help them get themselves onto the property ladder. Now, that might not initially jump out to you as a thing that you want to do, and asking for money is never an easy thing to do. But if you have an agreement with your parents and you can get a lump sum of money from them or from another family member that enables you to get back onto the ladder that you're able to then pay back over time, it can get you through that initial barrier to get you onto the market. If that's not an option to you, then the other option, and the option that probably should be considered in the first instance, is saving the money yourself. If you're really serious about owning your own home and it's a decision that you are keen to make for yourself, then you should be setting yourself a savings goal, a deposit goal that you want to reach, and a plan of how you're going to save that money up. Rearranging your finances and adjusting where you're spending your money and where your money goes to prioritize this massive financial decision is going to be really important in helping you reach that deposit amount that you're going to need. So if after watching this video you're really serious about buying your own home, I'd recommend coming back to this section and, as a little bit of action, a little bit of homework, just map out on a little bit of paper how much roughly you think you're going to be able to spend on a home, what home value you're looking for, and then work out what 10 to 15% of that value is as a deposit, and then work back from there how much money you think you can free up every single month in your finance system to be able to get you from where you are now to the deposit amount that you're going to need. Once you've got that mapped out, you can start to make other changes to your system that allow you to get there quicker and make other and better financial decisions that prioritize that decision that you want to make. And don't be put off by the deposit amounts. They might seem really high, but the flip side of it is that also that means you've got more of your own money invested in your home. So you have more equity in your house, which means that you need to borrow less, which also means over time you end up paying less interest as well. So whilst they might seem big and scary numbers initially, they can also help you on the other side in terms of paying less interest and owning your home quicker as you go through the length of your mortgage term. The second thing you need to consider when buying a home is the fees. Buying a house isn't just about saving up the deposit and then buying the lovely property on the end of it. It's also about considering all the other fees that come along with having to buy a home. We're talking about things like legal fees and product fees for mortgages, and I'll list out some more in a moment. But considering these fees when thinking about whether you want to buy a house is really important, because those fees, when they all come together and they're all added up at the end, can add a significant amount of extra money to the overall process of buying a home. There are lots of chunky fees in here, but just to list out some of the key ones to look out for. Solicitor fees. So these are the fees that are involved in having a solicitor help you with the paperwork required to buying your home. There's lots of paperwork needed from your side and then also from the seller's side as well, and your solicitor helps facilitate that. But obviously that doesn't come free of charge. There's a fee associated to that, and solicitor fees can end up upwards of £1,000 by the time everything washes together at the end and you've got all your paperwork done. The other thing to also consider when it comes down to fees is search fees and survey fees. So when you buy a home, there will be searches conducted for the local area and also a survey of the home that you're buying. Those two things also cost money and will be added into the solicitor fees that we mentioned at the top as well. So when you bring those in and add the solicitor fees together, you're probably looking at £2,000 just for those things alone. You've then got mortgage product fees as well. Now these fees really annoy me, but they are a fee that's associated to basically taking out a mortgage, and the general kind of understanding of what those fees actually go towards is a bit vague, to be honest, but any lender that you take a mortgage out with will charge you a product fee that's normally somewhere around £1,000, which is just simply a fee for taking out that mortgage. So a frustrating cost, but a cost that you're not going to be able to avoid. Then you've got the cost to actually move house. So when you've moved through all of those other areas that we've listed before, you've then got the actual cost of being able to move home, looking for removal services and things like that, packaging equipment, like it. Something that is often overlooked but can also ramp up the costs fairly quickly. And then you've also got the insurances needed to own a home. So firstly, when you take out a mortgage, you're required to have a buildings insurance cover for the house that you're buying in case anything were to go wrong. And then you've also got a life insurance policy that you have to take out as well when taking out a mortgage. The life insurance policy is there to cover the amount that's left on your mortgage. So if anything were to happen to you, there would still be a amount of money available to pay off the mortgage on your home. So considering all of those fees when thinking about buying your own home is really important, because as I said at the start, when you tot all of those up, they can easily be a few £1,000s extra on top of the moving cost. I'll drop some useful links down in the description on the fees associated with moving house so that you can do some more research into them yourself. The next thing to consider is about building equity. The first couple of points we've mentioned, the fees, the deposit, are all kind of what's generally kind of perceived as negative associations with buying your own home and negative costs that you have to incur with buying your own home. But there are lots of positives as well, and it's really important we look at both sides of the argument. So building equity is a really important and really notable positive of owning your own home. When you're renting a home, you are paying money to a landlord, and that money effectively disappears every time you pay that to a landlord every single month, and it goes into their pocket. It pays the mortgage on the home that they've got that you're living in. Whereas when you own your own home, the money that you're paying, which might be the same as the rent you were paying before in your old home, but that money is going down to paying down the value of the home that you're living in, the home that you own. Therefore, you're building equity. And over time, which is basically how a mortgage works, is that you get given the amount of money to start with to be able to pay for the value of your home, and then over time you pay it back. And every time you make one of those payments back, you own an extra small slice of your house. So when you're coming onto the market for the first time, whilst your mortgage that you're paying back will largely be interest and small amounts of equity, you'll still be adding small amounts of money to your equity, so that when you come to moving home later down the line, if you decide to, you've got more money than your initial deposit that you put in, assuming that you're able to sell your house for at least the same value, if not more, than what you purchased it for. So by building equity, it gives you more options in the future for what type of house you might want to buy. If you want to upscale, you want to buy a house with more bedrooms, or it's got a garage or a bigger garden, all of those things become options for you, because by buying your home, you're adding equity each time. In general, rents actually come out about the same / slightly more than paying a mortgage in the current housing market. So if you do own your own home, the likelihood is that you're going to be paying slightly less than you were when you were renting, depending on the type of property that you buy, of course, but you're likely to be paying slightly less than you were when you were renting, but actually building that money towards something for the future. So building equity is a really important consideration, because if you've got goals of yourself of what type of home you want to own in the future, or where in the country you want to live, then building equity can help you reach that goal. The fourth thing to consider when thinking about buying your own home is, how do you take the emotion out of that decision of buying a house? We get told all the time by previous generations how it's really important that you own your own home, and how owning your own home is a definition of whether you're successful or not. If you own your own home, you're successful. If you don't own your own home, you're not. But in today's society, that is just completely factually inaccurate. And it's really important that you strip those things out of your mind when thinking about buying a house. Buying a house should be making a decision that is the best decision for you, and not the best decision based on information that you've been told by previous generations or friends or anything like that. It's about making the right decision for you. There is no rush to buying a home. Take your time, take yourself through as many processes and stages as you think you need to get to a point where you feel like the decision you're making is 100% the right decision for you. There's so much to consider when buying a home. We've covered some of it in this video already around some of the costs and some of the things to think about for the long term. It's important that you go through all of those steps and any other steps that you think you need to be able to make the best decision for you. And it's a big step, owning your own home. You want to be prepared for that. You want to be prepared for knowing what that means, how to maintain your own home, how to sort out all the bills that need to be sorted, the potential costs that you might incur, and things that you might have to look after now that a landlord would have looked after previously when you rented. There's just lots of things that it's worth going through yourself and just making sure you understand the implications of those and what they mean for going and buying a new home. If you've been through all of those considerations when you come round to buying your own home, you're already going to be in a really good spot, because you've thought out all of the key things that may possibly come up or be a concern when owning your own home. But there are a few other pros and cons. If we put renting and owning your own home alongside each other, there's a few things just to weigh up on each side and a few other considerations that might help you make that final decision. So when you own your own home, firstly, you're in control of the payments that you're making. If you're on a mortgage deal and you're on a fixed mortgage deal for maybe 2 years, 3 years, 5 years, however long it is, you know consistently how much money you're going to need to pay every single month, which is your housing cost. Whereas in renting, at any given moment in time, despite what any contracts say, a landlord could choose to put the price of your rent up at any moment in time, which actually could have a significant impact on your finances, and by your rent going up a couple of £100 could mean the difference between you being able to afford to live somewhere and not being able to afford to live somewhere. So having those consistent payments can be a real benefit if you're tied into a mortgage, because you just know how much you're going to have to pay every single month. If you're owning, you also have control over your own home. You're able to do whatever you want around your house. You can paint the walls this colour, you can put up a curtain rail here, you can do anything that you want to because you own that home. Whereas if you're in a home that is owned by somebody else and you're renting, there are quite often quite a lot of restrictions on what you can and can't do, even down to little things like I remember from previous renting contracts that I've had about putting blue tack on the wall or picture hooks and things like that. If you own your own home, none of those things are a concern. You're able to do what you want whenever you want to because it is your house. And then there's equity, which we've already mentioned in this video, but there's a couple of sides to it that are worth factoring into your consideration. Firstly, the one that we've already discussed around every time you make a payment on your mortgage, you're adding a little bit more money to the value of the amount of money you've got invested in your house. So when you come to sell it, and assuming that you're able to sell it for the same price, you're able to get more money back than you initially paid in to start with because you've been paying in money over time. Whereas with renting, that money has effectively disappeared. There's also the other side of when you come to sell a house, in that your house could have actually increased in value. So if that's the case, you're also gaining bonus equity there when you come on to move to your next home. If your house has increased by say £20,000 while you've been living in it, that is effectively a free £20,000 that you're able to take and roll on to your next home. And that might mean making or allowing you to make a decision between a 3 and a 4 bedroom house because it takes you up to the next price bracket or anything like that. So it can really help you if you're able to buy a nice house, you're able to look after that house or even do some work on it that adds value, that you can then roll that value into future homes. If we look on the other side of the fence and we look at renting is more flexible. So if you decide that actually you want to move next month, then the likelihood is that you've probably only got a month's notice or rolling month's notice on your rental contract, and you're able to do that. You're just able to decide that if your job, for example, moves and it moves to the other end of the country, you can then just come out of your renting situation and move to a renting situation elsewhere. So the flexibility can be a real big perk. And if that's something you think you're going to need because of jobs or because of family, then keeping renting as a consideration could be a really important decision for you. And then there's the flip of the point we mentioned slightly earlier on about you can do what you want to your own home, but they're also, by renting, the home is not your responsibility. When things go wrong, a boiler breaks, a pipe bursts, a washing machine goes wrong, anything like that, the landlord is responsible for helping you in that situation. Whereas when you own your own home, they're all things that you've got to fix yourself. And that's why then when you own your own home, having savings and emergency funds and things like that are going to be really important to help you dig yourself out of a situation where you've got an unexpected bill. And in the short term with renting, the costs are just generally considerably lower. You don't have all of those fees that we discussed earlier on in the video, like solicitor fees and survey fees and certain insurance fees, those types of things. There's no requirement to have those when you're renting. So that can mean, particularly in the short term, that your costs are much, much lower, even if you move from one rental property to another. So just a few other things there that is worth considering when making your decision about whether you want to buy a home or not. Ultimately, the decision on whether to buy a home sits with you. It's down to you to work out whether you think it's the right decision for you based on your current financial situation, any potential changes to your life that may come up in the future. As long as you go through the process of considering all those things and weighing them all up, you'll come to the right decision for you. Owning your own home is certainly not everything. It can be a great way to put in building blocks in place for your future and your finances in the future. but it's certainly not essential. And if actually flexibility is more important to you, then definitely keep renting as a consideration or potentially an option that you pursue, because it will allow you the flexibility in your life that you need. Hopefully you found today's video really interesting, and there's been a few helpful tips in there that will allow you to consider whether owning a home is the right thing for you. All of those things are worth considering and worth weighing up before making the decision, because by doing that, you've got a better chance of making the right decision for you. So go back through, rewatch them, watch the individual tips. I'll make sure I put in timestamps down below so you can just pick out any of the individual tips that you want to go back to and cover again. But as I say, hopefully that video was really useful. We're going to be doing lots more content like this on the channel around homes. We're actually remortgaging at the moment. So when we've gone through that process, I'm going to do a video on how best to remortgage and put some of the things I've learned out there for you guys as well, so you can learn from that. But other than that, all that's left to me to say is thank you very much for joining me for today's video, and I look forward to seeing you in the next one.